Good morning, everybody, and welcome to Morning Markets. So today I'm going to discuss this morning's data release, which is the UK inflation data. But firstly, why is this so important? Why do we talk about inflation so much? It's important because inflation is very elevated in many developed markets. So if we look at the UK, the previous print that came out was at 10.1% annual inflation. And this is significantly above the Bank of England's 2% target. So investors this morning were looking at the inflation print data release, looking for any clues as to when will inflation come down, and also what will be the central bank's reaction function to inflation moving forward. But look, what are the numbers? So I'm sure a lot of you will have read this already in the papers on BBC News, but the number is 11.1%. Annual inflation coming into October. Now, if we look at how does that compare to last month? Well, last month was 10.1%. How does that compare to market expectations? So it is higher than market expectations, which were coming in at 10.7%. And for those of you that have read the headlines, there's a figure there that it's the highest inflation rate since October 1981. But look, what's been driving the higher inflation print this month? And it really focuses on one thing, and that is energy. So we've moved from the energy price cap to the energy price guarantee, and that energy price guarantee is higher. So when you look at the effect of gas prices and electricity prices, so gas prices are up around 130% over the year. Electricity prices are up around 66% in that annual calculation period. Now, those figures are high, but it's actually really important to understand that these figures have actually been constrained by that energy price guarantee. So if there wasn't an energy price guarantee and it was the open market, then the inflation print would have come in at 13.8%. So if you look at the annual bill for an average household, it was around about £1,971. With the energy price guarantee, it's gone up to 2,500. But if that guarantee wasn't in place, it'd be around 3,500 overall. So it does show the effectiveness and I guess the necessity of having that energy price guarantee. But what else can we take from the inflation print? It's not just all about energy. There's a lot of other components in there as well. So if you look, food and non-alcoholic beverages were up around 16.2%. So that compared to 14.5% in the prior calculation period. I guess on the more positive side, one of the things that are maybe sort of pulling down the calculation really focused around transport. So petrol prices and also second-hand car prices coming down. I guess, how have markets reacted? What's happened within asset prices? You've got to remember that a lot of this is expected. We knew that we were moving from the energy price cap to the energy price guarantee. And actually, when we look at what's been happening within the main UK assets, so UK stock markets actually mildly up this morning. If we look at what's happened within fixed income, so UK gilts, yields very slightly up, but no significant moves there. And actually, if we look at sterling, sterling's really flat on the day. So no significant moves in asset prices, even though maybe when you're reading the newspaper this morning, you're reading something that felt like a bit of a shock headline. And then just, I guess, finally for me, what's the TP outlook? So I think, thinking about the energy price guarantee, what could happen if we see changes to that, particularly in tomorrow's autumn statement. But what does that mean? It's quite hard to forecast that and to be very precise until we know those details. But even in the unlikely event that the energy price guarantee was abandoned entirely, the contribution of energy prices would still drop back next year. And that's because of the base effects that come into play within that annual calculation. So falling commodity prices suggest that food inflation should also be close to its peak, while weaker activity should begin to ease capacity constraints and cool inflation. As always, we, the True Potential investment team, The manager partners that we work with will continue to monitor the situation. If you are interested in learning more about all of the stories this week, so not just inflation, but also tomorrow's autumn statement, please do join myself and my colleagues on the podcast this Friday, where we're going to have a really good discussion around all the different things we've seen this week. That's everything for me. Thank you very much. Bye.
If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.